certified financial planner, co-founder at Flynn, Doug Flynn. All right, so this is kind of, speaking of being back, like a flashback to 3 years ago when all these meme stocks were the news. What do you make of it, that all this guy had to do was show up on social media and here we go again?
Yeah, it feels like that. It's a little different, but I from the standpoint of that, it's not just the one stock. It's really, they're looking at which stocks are shorted the most, and they're kind of rolling from GameStop onto these other ones, one after the other. So it's a little interesting to see the power behind this, but it does show you what retail investors can do if they band together a little bit. So anyone that hasn't seen that movie, which by the way, you're in, Connell.
That's right. I'm still waiting for my royalties. So apparently you don't get for that. Yeah, there was a clip of me in it. Cuomo's in it. A bunch of people are in it, but because it was a big. They used news clips at the time. It was a big news story at the time, and I guess it is again now. But the whole idea was, hey, here's these normal people. The guy in his basement, the cat guy, and then these other people on college campuses. Somebody working at Blockbuster, whatever it was, and they're able to. Make a lot of money on these stocks. And at first, here he is, roaring kitty. But at first, people, in the Wall Street world, people with a suit and tie like you said, no, this is nonsense. But, the stocks went up. I mean, what do you tell people now about this?
So the big thing about a lot of this has to do with the shorting stock. So there's people out there that think a $20 stock is going to go to $10. And so you're basically borrowing the money and selling it before you buy. You're selling it at 20, thinking it's going to go to 10. You'll buy it back. You'll make that $10,000 difference on 1,000 shares. Now, if that $20 stock goes up to 60, that's called a short squeeze. Now the person still can only sell it for 20,000. But now they got to buy it back at $60,000. So in that case, they've lost $40,000 if they sell. And so these guys got together, and these girls, everybody got together and pushed the stock up on the stocks that they liked to try to drive these guys out that were trying to bet it was going to go down to drive it up. And that's what happened. Those people lost a ton of money. The trick is, when do you get out? And that's what the movie shows well, and what really is the common thing. When we're talking to people, this always gets into not the core part of your portfolio. If you want to play around, you do that with a small percentage of your money. And certainly you can make money on this, but it's a trade. You're going to buy it and you're going to sell it, and you have to have a beginning and an end point. It's not a long-term hold like a traditional investment would be. So
and
that's
a lot
the way
of it was like the class warfare. What did you make of all of that stuff? Because it was this guy, again, roaring kitty, who apparently he made a lot of money up in, I think he was up in Massachusetts. He was trading down in his basement. He apparently was still up a lot when he went dark, so to speak, until a couple of days ago. But, the Mets owner, Steve Cohen, was portrayed in that movie with, I'm sure he loved that with the pig. But he was in the movie, and he had to bail out one of his old employees, right, at one point. That's right. That got killed on the short, because you're short a stock, you could lose an infinite amount of money. But they made it all about class warfare.
They did. It's the exact opposite. Like a stock theoretically can keep going up and up and up. When you own it, then you can keep making an unlimited amount of money on the way up. When you short it, the amount that you can lose is unlimited, because what you have to buy it back for, what you were originally selling it for, is an unlimited amount. So at some point, people only have so much money. They have to sell and take their losses. And if they don't, or if they wait too long, that's when you might need a bailout. And I think it really was. They were trying to say, hey, we can compete with these people who are looking at fundamentals. And none of these stocks trade on fundamentals. If you look at it fundamentally, they're not making money. Maybe it really is a $5 stock, but that doesn't mean in the short run it can't run all the way up as it did. I mean, that GameStop, as an example, a month ago was below $10.
And it might happen again, right? So what if it does, then what does it tell you about the environment we're in? The Federal Reserve Chairman, who we do talk about all the time, was overseas today. He made a speech in Amsterdam where he was talking about inflation. I think the headline was, we're going to take a wait-and-see approach with rates and inflation. Okay, there's Jay Powell. But what about this environment? If we're in another frenzy like this, just say hypothetically, does that make it more challenging for the Federal Reserve to cut interest rates? Because they're saying people are still speculating like crazy. I mean, is there any connection, you think, between the two?
I don't think much. I think the Fed is really focused on the inflation numbers. I don't know that they're going to get the inflation numbers that they want to get us to a cutting point anytime real soon. Maybe that's later in the year. I don't think they're going to pay attention to this too much. But it does show you that, when the valuations are high and these people can drive stock prices even higher, and there isn't necessarily sanity in what they're doing. But that's what the market is. In the short term, it can be insane. In the long run, it is sane, because good companies that make money, that are profitable, that are growing, are going to do well over time. Just on any given point in time, they may or may not, as is evidenced by this. In the long run, if these companies don't make money, they're not going to make it.
Which
But
is why
you can
GameStop was at
trade.
$10 a couple of days ago and then went way up a lot. But do you think we're going back into a frenzy like that, or this is just a couple of days, or any sense?
I don't feel it yet. I am starting to get some calls, getting it so we can kind of gauge from clients, and it's maybe really, really just beginning. So maybe it is the beginning of that. And if it goes too high for too long and we're hitting all-time highs and all that's happening, then we say we have a fear of heights and we get a little bit concerned about where things are. I don't think we're anywhere near that yet, and it's too early. And the interesting thing that's different about this time is they're really spreading it around a little bit more than really super concentrating on one. So maybe that's a little bit more of a successful way to do this, because last time, as you know, a lot of people lost everything.
Doug has a lot of clients on Long Island down in the basement with bandanas on there. You wouldn't think, but the bandanas on their head, and this is the kind of people that he's talking to. Thank you, Doug.